a sweet day. But I wanted to talk to you about a setup that we've taken in our chat room today. You know, we were done trading at 9:45. This is what we call an opening setup. And uh, what I did was I shorted this UVXY based on the fact that this S&P had been down 4 days in a row, and we're resting right on the 50-day moving average. And you can see where it looks like we're starting to get a rebound. And so what I wanted to do was short volatility. As volatility rises, when the market starts to pull back aggressively. And so essentially this UVXY had gone from 940 all the way up to $16 over the last few days. And so what I'm doing is using the parabolic short setup to time the market bounce on the S&P. And so today when UVXY gapped up like this, that gave it an exhaustion gap that gave me an entry to take this thing short, and we ended up with a 615 short with the stop just at 640 or so for number one, the gap fill, and then a flush down to support. Now at the open, we ended up covering the rest of this at 1460s or so. But at the open, you want to take those really quick trades, as the open is where you get those price spikes down. The open's about price discovery. The middle of the day is about price retracement, and the end of the day, you tend to choose a side. But this is an interesting way to play the markets, and you can see UVXY is not really a good trader unless there's actual volatility in the markets. When the market's going up every day, really in an uptrend like we've been on the S&P, you don't have any range on UVXY, and so it just ends up being a bad trader because you don't have really any back and forth in it. But what happens is when the volatility comes in, we have all this Brexit stuff, and the S&P's been pulling back. We have FOMC tomorrow. Now you're starting to get some volatility into the markets, and this is well over a 50% run, and you can see it really triggered an overbought condition and just an overall extension in a handful of days, really 4 or 5 big days. And so that's something that when I see the exhaustion gap, I want to take short for that quick spike down to play the bounce in the S&P. And so just a little bit different way of doing things. You can play the general market or individual stocks. I did long some WLL and X at the open for some quick trades too. But the big gainer was this UVXY, and that's my kind of bread and butter, is that when the market is due for a bounce and that volatility has been really increased, I short the volatility because you just get such exaggerated moves. And that's what really momentum trading and trend trading is about, is making sure that you're able to get the most bang for the buck. You're able to get the most bang for the buck in terms of what's going to give me the biggest range so I can commit X amount of dollars and really take in a good chunk of it, right? Because we're not in the business of trading billions of dollars, and so we can't trade like Bank of America or GE because its ranges are just too small. As retail traders, we need to make sure that we're in the best stocks that fit what we do. So this is what we do in our Bulls Vision every day. That's our chat room where I'm on video and screen share all day, calling out the trades in front of our students. We always have great discounts on our bundle packages. Right now we have a 51% discount on our annual package, where you get access to the chat room, the trade alerts, screen share, the works. So feel free to come in and watch me trade anytime, and I'd love to see you. And also feel free to leave some comments. I love getting feedback from our students and our friends. So I'll see everybody later. Take care.